on closing the innovation and time to market gap for insurers, brokers, and platforms. I would like to just introduce the two presenters, Thomas and Ashish Trivedi. Can I invite you on stage, please? Thomas, who is the co-founder and CEO of RiskWolf, has 2 decades of reinsurance business development experience, has held senior roles globally, including in New York, London, Paris, Munich, and Zurich. Helped build 3 startups and electronic reinsurance initiatives such as ECOT, eBot, and ECOT. Another presenter, who is Ashish Trivedi, over 25 years of experience. He leads market development Asia at RiskWolf, experience in building and running companies, a technocrat with a deep understanding and expertise to conceptualize and grow businesses, has lived and worked in US, Middle East, India, and various countries in Asia. He's the founder of several startups along with solid corporate background at ATT, Anti, Lucent Technologies, Niptech, and Nokia. Can I have you on stage, please? Thank you.
So I think the introduction was longer than our presentation. That's the good news, right? So I know this is the last session. I promise you it'll be very, very, very quick. So let me just start. We are RiskWolf. We are a Zurich-based insurtech. My name is Ashish, and Thomas is behind on the keyboard over there, our co-founder and CEO. So basically, our focus is to build parametric, 100% parametric insurance programs and products. And there are really 2 areas of focus for us. One is the types of risks, One is all the risks related with weather, and the other one is risk related with digital infrastructures. So weather, obviously, the usual suspects. It's rainfall, it's temperature stress, hail, snow, what have you, right? So everything that we've seen in terms of the climate and the weather that impacts. On the digital side, these are risks that are becoming more and more important, more prevalent in the market now. For instance, as an example, cloud downtime, right? So as businesses move to cloud and data centers, they are the assets that you want to insure. So any kind of a disruption that happens to cloud can lead to a major event from a business disruption perspective, right? So those are some of the risks that we bring into the platform and help you insure that. So we orchestrate and facilitate building of these products. So we work both on the supply side with the carriers, the insurers and reinsurers, and we work with, on the demand side, with brokers, MGAs, and digital platforms, right? So let's get started. We'll do a quick demo. Let's go ahead and log in. So everything for us starts from what we call the Innovation Studio. And in this Innovation Studio, we've got different stages and categories, which essentially relate to the phases you have to go through to create a product, from all the way from concept to building coverages, to code, to policy ID managements. Although we don't do policy management, we do ID tagging with the carriers, and then all the way to real-time monitoring for triggers and the payouts. And again, because this is 100% parametric, we're talking about quick payout, quick recovery, right? So let's go ahead and start a new coverage. So let's, from a persona perspective, let's think about a farmer. Doesn't matter what crop it is. And let's pick rainfall as one of the perils. So we go ahead and select rainfall. And as you saw in the drop-down, there was a lot of other categories of perils. The next one would be the data, right? So data is really, really important for us. Our motto is, if you can measure it, you can insure it, right? So everything starts with the right data. So in this case, for India, we're going to select IMD as one of the options. And since it's rainfall, it'll be a grid of 25 by 25 kilometer. The next piece would be what location you are trying to cover. So you would go ahead and select any kind of a PIN code. So let's say it's in Maharashtra. We've selected a PIN code. Go ahead, next. This gets us to the indices, right? So because it's a parametric insurance, everything has to do with the index that you've created, right? So for rainfall and for many other indexes, as you can see on the platform, we've created, so every risk is different. It may look the same because the peril may be the same, but every risk sort of comes with its own flavor, and that's why we create a separate index for it. So you can see a long list of indexes. In this case, what we're going to pick is a deficit rainfall index for a farmer. So basically, they're trying to cover if for the risk period, the amount of rainfall that was expected, the actuals were less than that, right? So that we're going to pick that index. Now we get to the payout structure. So once we've done all of that, there are two types of payout structures that you can create. One is a direct pay, a lump sum payout, where if a trigger is hit, you go ahead and give them the payout. The other is the linear payout. So the way we create the linear payout is the first thing we do is we look at the risk period, right? So let's go ahead and put a timeline of, let's say, from March of 24 to June of 24. So once the risk period is created, then we need to look at the trigger itself. So in this case, we said it's going to be deficit rainfall. And let's say the trigger is, for the risk period, the rainfall, if it's less than 125 mm, or yeah, 125 mm as the trigger point. The next point, because this is, again, linear, the first payout will be, let's say, 25% of the sum insured. So whatever the sum insured is, as soon as the risk period doesn't give you 125 mm, there'll be a payout given to the customer of 25% of the total sum insured. The next piece is what we look at is the severity. So if only 100 mm came out in that risk period, we will give another 2% for every less mm, all the way from 125 minus 100, right? So that's how we create the linear payouts. Now, once you've done that, basically it gets you to a review screen, which you check everything is okay, and everything is okay, you go to the simulation of the coverage. And with a click of a button, the platform magic happens behind the scenes where all the modeling and all the input has been taken, and it simulates this particular coverage that we have just created. So it takes a little bit of about 5 to 10 minutes to do all of that. So here we have one that we had created earlier. And as you can see, what this does is it creates a basic actuarial premium risk numbers and a report. And the report has all the details of historical data, what the payouts had been earlier, what your loss ratio is, and all of that information can then be presented essentially to a carrier, right? So what we've done here is, and this is the important thing, right? We've taken a concept, we've taken a risk that came in from the market, and we've packaged it and put it through our coverage process to make it a potential insurable risk. Right? And when we say innovation and market, time to market, this is what we're talking about. We can take something and easily create for different risks within a few days to a point where at least the carriers can look at it and say, yes, I have appetite for this, or I don't have an appetite for this. Or maybe a point where let's add our modeling to it, which we can do, so we can bring carriers modeling on top of this, add that, maybe some predictive analysis as well. So all of that can then become a calibration, reiterative process with all the parties involved. And then we get to the next stage. So as I said, there are different stages in the platform. The first one was coverage, and the next stage would be the quotes. So when we start to create the quotes, and don't worry, we're not gonna go through the whole demo, so this will be quick. So in the quotes, what we do is then make it a little bit more personalized, more customized, right? So then you go down to the farmer level, number of acres, what their appetite for premium is. All of that information is added. And similarly, as was in the coverage, on the quote side, there's a big report that comes out. And in this report, more information is added. So this is now at a individual level. It can all get bubbled up. It's aggregated as a complete risk, so the carrier can take a complete view at what this overall risk would be. And then you can do the loadings that can be added, the tax can be added, everything. So in one basic package, they're able to look end-to-end risk. Right, so let me stop there, but basically what happens after quote is once the carrier agrees to this and the front-end client agrees to this, it can then, through the same platform, go through the next steps, which means a policy can be created, and we can tag onto the policy ID, which obviously sits with the cedent, and then we would be involved in the real-time monitoring of that particular trigger. So as soon as that trigger is hit, and the important thing here is the same data set that we use for the coverage is used for the monitoring, so that there is a trust factor and there's transparency there, right? Once the trigger is hit, we would notify all the parties involved in the ecosystem for the payouts that need to go to the clients, right? So yeah, so that's the end of the presentation, and thank you all for your time, and we're here if you have questions later on.